If you're going to revalue it, how much is it? Who owns it? What is it worth? I'm much more interested in the audit and the title opinion than I am the revaluation. If you tell me, backed up by an audit, that my government has X million ounces of gold, I can revalue it. I've got a calculator. I know how to do that. I would really be curious. And when I say an audit, I don't mean Donald Trump performing theater, walking through Fort Knox, petting the bars with his camera out, taking a video. I don't want a trust me thing. I want KPMG or PricewaterhouseCoopers or somebody like that, not the Congressional Budget Office. I want a third party walking through there and conducting a proper audit.
As the U.S. prepares for an intensive gold reserve audit, parallel changes in global monetary policies are also emerging. Central banks are increasingly rethinking their reliance on U.S. treasuries. Notably, BRICS nations actively explore alternative, sometimes gold-backed monetary systems. Speculation is growing that an official audit could be the first step toward a formal revaluation of America's gold reserves, still recorded at an outdated $42.22 per ounce despite the market price approaching $3,000 per ounce. With decades of experience in the sector, RickRule prioritizes an audit over revaluation to determine whether U.S. gold reserves are truly there. He insists that firms like KPMG should do it, not the government. In his analysis, Rick underscores a shift toward physical gold possession in the U.S., driven by fears of potential tariffs. According to him, investors increasingly demand physical delivery over paper claims as gold prices rise. Another key concern Rick raises is the diminishing liquidity as central banks continue heavy buying. He warns that multiple claims on hypothecated gold create ownership disputes, pushing investors toward direct physical possession. Investors and central banks now recognize the inherent risks in holding gold through paper-based instruments, particularly during economic uncertainty. The risk of a liquidity crisis, where investors attempt to redeem paper gold holdings but find that physical delivery is either unavailable or significantly delayed. Another significant development in the gold market is the increasing preference for physical gold among governments, financial institutions, and individual investors. Central banks, particularly in China, Russia, and India, have aggressively accumulated physical gold as a hedge against currency devaluation, inflation, and geopolitical instability. When asked about the possibility of revaluing the gold on the U.S. Treasury's balance sheet, Rick states that it will likely happen, but mainly for theatrical purposes. He dismisses the idea that it would resolve the $36 trillion debt, as government debt is unsecured. Revaluing the U.S. gold stockpiles might look tempting under debt ceiling constraints, but it would have far-reaching implications for the financial system, boosting liquidity, and prolonging the Federal Reserve's balance sheet unwind, according to Wrightson ICAP. Now we present the clips of RickRule's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
People who want to get Europe out of gold and into the United States, or Americans that want to take delivery of gold, are afraid that a tariff will be applied to gold by Trump, and they're trying to beat the tariffs. A second problem, and a second possible explanation, is that the paper gold market, which is to say the futures market, commonly trades in one day 100 times the amount of gold available for good delivery. For 40 years, that hasn't particularly been a problem because gold has been at best directionless. But now that gold is directional, the idea that somebody's paper position in gold could be an unsecured obligation, and that as a gold option holder, you actually don't hold title to the gold, I think has bothered some people. I think that some people who want large quantities of gold have decided that they're going to have physical rather than paper delivery for their gold. And the idea that a deposit receipt in Switzerland is collateral for good delivery on the COMEX is, I think, from a lot of people's view, problematic. They want, physically to have their gold. The third thing is that the big institutional players are beginning to understand that the asset class is less liquid. There has been concerted buying of gold for 3.5 years by foreign central banks. And it is arguable that the existing hold of stock, whether or not available for good delivery, is insufficient, at least in the near term, to discharge all the charges against it. It's related to the first. If you have, 1 million ounces of gold, as an example, in some high quality vault, but that gold has been hypothecated and rehypothecated. If you believe that you own that gold, you don't want any chain of possession on your title. You want the gold. And I think all of those reasons combined have led to disintermediation from private storage and from LBMA stocks to physical possession in the United States and other centers. A more important question, I think, is the gold there, and who has title?
Right.
I'm inclined occasionally to take the government at its word, but since the gold hasn't been audited for 40-something years, I think it's right that the gold be audited. Sprott audits their gold every year. The technology exists for this. Basically, it's 1 bar, 2 bar, 3 bar, 4 bar. Count the bars and test a few. And while you're at it, give us a title opinion. Whose gold is it? Did you borrow it from somebody, or is it actually our gold?
Just seeing it there isn't enough.
If you're going to revalue it, how much is it? Who owns it? What is it worth? I'm much more interested in the audit and the title opinion than I am the revaluation. If you tell me, backed up by an audit, that my government has X million ounces of gold, I can revalue it. I've got a calculator. I know how to do that. I would really be curious. And when I say an audit, I don't mean Donald Trump performing theater, walking through Fort Knox, petting the bars, with his camera out taking a video. I don't want a trust me thing. I want KPMG or PricewaterhouseCoopers or somebody like that, not the Congressional Budget Office. I want a third party walking through there and conducting a proper audit. At Sprott, we did it every year. It made our shareholders feel better. It made our trust holders feel better. And to be honest with you, as a director, it made me feel better too.
Market expert RickRule points out that gold has been averaging nearly 8% compounded annual growth. Rather than focusing on short-term price movements, he views gold as protection against the erosion of the US dollar's value. All eyes are on gold as its price continues an unprecedented rally above $3,000 an ounce. However, investors should not overlook silver, which trades near a key resistance level. While dismissing the gold-to-silver ratio as irrelevant, RickRule owns silver because there are no better alternatives for that portion of his portfolio. He notes that silver outperforms gold when generalist investors enter the market. Silver is expected to outperform gold in the coming years, and increasing industrial demand will counter limited supply. The price of silver can even reach $40 per ounce sometime in 2025, given the robust demand. This growth potential creates a nice buying opportunity for traders. Nevertheless, market liquidity risks, rising interest rates, and changes in investors' sentiments, among other things, may affect the market negatively. Let's get back to the interview.
They say that gold is breaking out to new highs. I'm not sure that in real dollars, gold is breaking out to new highs, certainly nominal highs. What gold is meant to do is maintain your purchasing power over time. And gold has done a wonderful job. Danny, not too long ago when you interviewed me, I made a wisecrack about when is gold going to move. And my answer was it was going to move in the year 2000. 2000, it was $250 an ounce. Now it's $3,000 an ounce. It's up almost 9% compounded over 25 years. That's what I'm looking for. The fact that gold is above 3,000 doesn't matter to me. I'm not a trader. I own gold, not because I thought it might go through 3,000, but because I was afraid it was going to go through 9 or 10,000. What we're seeing is gold defending you against the deterioration of the purchasing power of your savings and investment assets in US dollars. People need to get that. It's okay if you want to trade this stuff. It's okay if you want to speculate in junior mining stocks. But the idea that gold went from $2,700 to $3,000 is of no consequence whatsoever. It's the fact that gold went from $250 to $3,000 over 25 years that matters. And that matters a lot. The prevalence of gold or silver in the Earth's crust, 16 to 1, does not go to value, does not go to utility. While it's an interesting rule of thumb, I think it's a rule of thumb that isn't relevant to very much of anything. I own silver for a reason. When somebody asks me when and where I'm going to sell my silver, I'm going to sell my silver when I have a higher and better use of the cash. I believe that every day I don't sell something that has a bid on it, I bought it again. I had a choice between having cash or having that asset class. And until I see an investment that suits that part of my portfolio better than silver, there isn't any ratio between gold or silver, or there isn't anything with regard to the price of performance negative about gold or silver. There isn't anything technical that would cause me to either buy or sell silver. I have experienced in my lifetime 3 times a change of leadership in a precious metals bull market where leadership went from gold to silver. This occurs when the generalist investor comes down into the precious metals space. When that happens, silver outperforms gold. When is that going to happen? I have no earthly idea. When am I going to sell? I don't know that either. What I do know is there will come a time, I believe, where silver has done well enough in my portfolio. And by the way, I'll be very proud of my silver position then, where there is another asset class that's cheap and fulfills the function that silver has fulfilled better than silver itself. At that point in time, I'll be a seller.
The call for a Fort Knox audit has moved gold reserve concerns from speculation to a serious policy issue, highlighting gold's growing role in global finance and geopolitics. Given the growing preference for physical gold among investors, how might this trend impact the stability of the current financial system? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.